Hello friends, we'll be discussing an illustration which is related to the comprehensive problem of company accounts. Now, in this illustration, we'll be specifically discussing about the pro rata allotment, how the pro rata allotment happens, what exactly you need to do when in a kind of pro rata allotment, or rather when any kind of pro rata allotment question arises, what exactly you needs to do, or rather what exactly needs to be done in this scenario will be explained in this specific illustration. So let's figure out with the illustration that will be jotting down here for your reference. The first line of the question states that it is about Z Limited, who has registered capital, that means authorized capital of that specific company is 20 lakh rupees divided within 80,000 shares of rupees 25 each. That means the total number of shares that they have is 80,000 share and the value of each share is 25 each. Now you have to figure out how the question goes ahead with the issuance of these shares. Now, out of those 80,000 shares, what they had as an authorized capital, they issued 40,000 shares for subscription here. Now, this subscription has happened in a specific manner. We'll understand what exactly the specific manner was when the subscription happened, like the application money, allotment money, first final call money, etc. etc. We'll be checking through it. Now, those 40,000 shares which were payable at the rate of 25 value per share, this 25 segregation has been given here. On application and allotment, they took 7.5 rupees per share, and on first and final call they took around 5 rupees per share. This is the bifurcation that they have given. Let's figure out what exactly do we have more in this question about pro rata allotment. Now in the question they have mentioned that the company received an application for 46,400 shares. That means this is a clear case of oversubscription because the issuance was only for 40,000 shares here. Now, they have also mentioned that applications for 4,000 shares was rejected completely. And the person who had applied for 4,000 shares only got 1,600 shares which were allotted to him, and the excess money that he has paid on application was adjusted in the allotment money. So now we have to go ahead and make the journal entries related to this, but before that we'll do the working. So now that we are completely aware of the question, let's just start with the working here. That working will refer to the pro rata allotment calculation. Now when we talk about application and an allotment, it will work hand in hand. That means the total of all the applications should be equivalent to 46,400 rupees, or rather 46,400 shares value, and the allotment should be equivalent to 40,000 shares. Let's figure out how exactly we are going to do. The first thing that we are going to do is the bifurcation of rejected shares first. Now the bifurcation has been also shared here. For the first category, we have taken the rejected shares. That means 4,000 shares were completely rejected and the amount was refunded there. After which there was another set of 4,000 shares which a specific shareholder applied for and he got only allotted 1,600 share value. Now out of the total, that means whatever total we have, that is 46,400. If you subtract 8,000 shares, the balance that is left is 38,400 which has been fully allotted, and if you add the 38,400 to the allotted 1,600, that will be equivalent to 40,000. So this means that the 46,400 shares, or rather the subscription that we had received, we have rejected some, we have allotted some on pro rata basis, and the balance has been fully allotted, and this constitutes the final verdict of allotment being completed. Now we'll start with the journal entries related to this. So the first thing that we'll be mentioning here is the receipt of, or rather we'll be talking about the application money that we have received here. So let's start with the entry of receipt of application money. Now the entry that we have passed here is bank account debit to share application. The amount that will be reflecting will be for 46,400 shares multiplied by 7.5 because that is the application money value. So the total value here comes to 3,48,000. Now out of this value, we have refunded certain amount which requires, or rather which refers to 4,000 shares being rejected. So we'll mention that now. Again, as it's a refund entry, that means that will be the reverse entry of what we have passed for receipt of application money. Now, after this, whatever amount is supposed to be transferred regarding application will be transferred to capital employed, or rather the share capital account. This will be only referred to the amount that is relevant to the allotted shares. That means the maximum share value that we have that we can issue is only 40,000. So the amount that will be moved related to the capital will be only 40,000 multiplied by 7.5, nothing more, nothing less. Now the entry that will be passing here is share application account debit to share capital to share allotment. The reason why we are crediting share allotment here is because we have certain excess money of one shareholder who has applied for 4,000 shares, but we have allotted only 1,600 shares to him. That means whatever additional shares he has applied for, that application money is still with us, and that will be considered for his allotment money. Hence, that will be taken care rather in the allotment category. But right now, while transferring, we have share application money, or rather it's conclusive of share application and allotment together. So we'll segregate that. So when you have to mention the amount there on the debit side, you can simply do one thing. Whatever application money you have received, out of that, how much of a refund has been made, subtract that, and the balance will be mentioned here on the debit side. Now the amount that we have to transfer in the share capital here is 40,000 multiplied by 7.5. On the debit side, you have some total. On the credit side, you have a variable total. Whatever balance is there will be the allotment account transfer. So if you can see, share application has a balance of 3,18,000, out of which the actual application money is 3 lakh rupees. So the balance 18,000 is the allotment money, or rather the excess in allotment that we can use. Hence, whenever the allotment due happens and when we are supposed to receive the allotment money, will by default receive this much amount less as compared to the what, or rather as compared to our own expectations. Now the fourth entry that will be passing here is the allotment due entry. Now when it is allotment due, we know the due entry is very simple: share allotment to share capital. As there is no premium here, hence no mentioned, or rather no necessity of mentioning the premium account here. It's a simple plain entry: share allotment account debit to share capital. Let's mention that here. Now the allotment has been done for 40,000 shares. The expected amount per share value is 7.5 rupees. So that means 3 lakh is the amount that we are expecting. So now that we have mentioned 3 lakh is the amount that we are expecting here, while we are expecting that amount, but we are not supposed to receive that much of amount. We are supposed to receive an amount less than that, because we have additional 18,000 already in use. That means someone has already paid in advance, and hence that specific thing will refer to deduction from the expected amount. So whatever we'll receive in our bank account will be 3 lakh minus 18,000. So the entry that we have passed here is bank account debit, share allotment account debit to share allotment. That share allotment that has been credited here refers to the 3 lakh amount. The share allotment that has been debited here refers to the 18,000, and the balance is 2,82,000 that we have received in our bank account exactly. Now let's start with the first call due entry. So the entry for due or first call is share first call account debit to share capital. Amount is 40,000 multiplied by 5, that is 2 lakh rupees is what we are expecting. As there is no calls in arrears in this, no calls in advance, hence whatever amount we'll be receiving is exactly 2 lakh rupees, and the entry will be bank account debit to share first call. Let's mention it on the next page here. Now the next entry will be receipt of share first call. We have passed that entry, which refers to bank account debit to share first call account. 2 lakh rupees has been credited here. Now similar to this, we'll have the share final call due and receipt entry. So let's pass that entry now. So the entry that we have passed for due is share final call account debit to share capital, and after that the receipt entry refers to bank account debit to share final call account. With this, the journal entries have been closed. But what next we'll be doing here is that we'll be preparing the application account, we'll be preparing the share capital account, and we'll prepare the share first call, allotment call, or rather the final call account as well, just to see where exactly the accounts are self-balancing or whether they have to be manually balanced. So let's go ahead with the basis of the journal entries that we have passed right now. On that basis itself, we'll go ahead and transfer these entries into the accounts itself. So let's start with the account preparation now. So now we'll be preparing the journal entries account transfer ladder ledger accounts here. Let's start with the ledger account of share capital first. Now on the basis of this first ledger account that we have prepared, that is share capital account, in those entries that we have passed, wherever share capital has been credited, on the credit side we'll mention the debit item whatever was there. For example, share application to share capital. So on the credit side of share capital it will be by share application, and on the debit side of share application it will be to share capital. Similar to that, we'll record all those entries now. So the first thing is share capital itself. So the first item that will be mentioned here is the third entry that we have passed, that will be related to application money being transferred to share capital. Let's mention that. So we prepared the share capital account whereby we have mentioned all the entries whereby the due entry basically, because that was the only entry where share capital was credited. So that we have mentioned here, 3 lakh each for the first two, application and allotment, and for the first and final call 2 lakh each. That is the balancing ledger. That means whatever balance we have will be moved to the liability side, or rather when we can talk about in the balance sheet, it will be showed in the liability side. So the balance here is 10 lakh rupees. Now we'll prepare the bank account here. Now the first entry refers to the bank amount, or rather receipt of application money. In the receipt of application money and the refund that we have made, only in those scenarios will be the situation where bank account will be debited and credited. So let's mention the first receipt. That means bank account debit to share application. So on the debit side of bank, it will be to share application. Now, as there was a refund entry, hence on the credit side also will be mentioning by share application, because that refund entry was share application to bank account. So on the credit side of bank account, will be mentioning by share application with the amount of refund. Now, apart from all these application money, we have allotment, first and final call, whereby receipt was done. So we'll mention that amount now. So after application, it was allotment received, whereby we received only 2,82,000 because 18,000 additional balance was there in the allotment account. Hence that was utilized, and whatever balance is left was supposed to be received by us. So that has been mentioned there. After which we'll be mentioning the first and the final call. Now we have completed the last account that we had to prepare, that is bank account. Let's tally it and figure out what exactly is the balancing figure here. That will be moved to the asset side of the balance sheet. So that balance comes to 10 lakh rupees. The total of bank account comes to 10 lakh 30,000. That means if we can figure out whatever amount we have received as capital, the final adjustment after doing all the adjustments, rather, we have the final total equivalent to the capital amount that we have. So this is what we wanted to show, that whatever capital account balance you have will be equivalent to the bank account here, and so the accounts can be matched. But before matching the accounts, you need to have proper adjustment. If this is equivalent, that means the sum is absolutely proper and clear, and there is nothing, or rather there is no worry that has to be done here to verify or whether to check if the sum is correct or not, because this is one way to check the methods if all the entries have been correctly passed or not. So this is what we had to say when it comes to pro rata allotment. Make sure the bifurcation is done in a proper manner, especially when the pro rata case comes into the question, because that is a very tricky part, and if that is solved in a perfect manner, your sum will be completely flawless. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.